Hi, welcome to Let's Talk Bonds, the weekly podcast from INR Bonds. I'm Arjun Patsati. And in this podcast, I'm going to talk to you about the best bond that was available for investments in a time when interest rates have been rising very sharp. And this I mean by the best bond with the highest credit rating as well. And before I go to this bond, do not forget to download our app, Quick Invest by INR Bonds. We give you a curated list of bonds for the best performing bonds in the market for you to invest in with all the information around proprietary risk score and a best, easy, smooth in-app investment process. Download the app now.
It was a tough journey going from an intern to a senior professional. Now, to protect my savings against high inflation and grow my wealth, I invest in bonds with INR Bonds. Download the INR Bonds app to save better.
Back to Let's Talk Bonds. Now, let's take in the last 1 year, the government bond yields, 3-year, 5-year government bond yields have risen by almost 150 basis points or 1.5%. And the Bharat bond ETF too has risen by almost that much. AAA bonds, Bajaj Finance, yields have also risen by almost 1.1% plus or 1.5%. In all this, the only bond that has not seen yields rise very sharply is the SBI perpetual bond. SBI 2-year, that is 2024, 25, and 26 bonds. They have only moved by 20 basis points or 0.2%. And investors who are invested in this bond have seen their returns outperform all the other returns in the market. The best credit rating available. SBI, as we all know, is the biggest bank in the country. And being the biggest bank in the country, they don't have any problems of liquidity, access to capital, and it's all the bond safety is almost equal to the safety of government bonds. And with this, the SBI perpetual has seen very, very steady yields because there's been steady demand. Because one is the yields were pretty much steady at 7%, even when 3-year GSEC yields had fallen to 5% levels. Or 2-year corporate bond yields were at AAA corporate bond yields fell to 6% levels or below. Many of them even came down to around 5.5% or even below that. With that, the investors who were far-reaching enough or who had followed, for example, the INR bonds platform, where we were constantly listing SBI PERP bonds, given that it was moderate risk, carried a good steady protection against rising interest rates. And the fact that even though it's a perpetual bond, the largest bank in the country, government-owned bank, will not lack any kind of capital problem, will not lack any kind of access to capital when they have to service bonds. So it is almost with 100% probability that SBI will call these bonds in 24 or 25. That is, they will exercise the call option and not let it run to perpetuity. Like we all know that what happened to India Bulls when they did not exercise call option, and what happened to Yes Bank perpetuals when the bank failed. But SBI does not. SBI is in a much is not nowhere. SBI is the almost akin to Government of India safety, and there is absolutely no reason why SBI will fail its investors. And given that they are the biggest bank in the country, they will have to keep the bond markets pretty much stable, and also make sure that there is a lot of liquidity in the bond markets, because it helps the government as well, and the bank as well, and the whole financial ecosystem. So SBI PERP has been the best investment for investors whoever bought into the bonds, and whoever bought into all other bonds have suffered a lot. They have suffered a huge capital gain at least by about 3%, 2 to 3% capital loss they have lost the last 1 year by investing in low yielding bonds where yields have gone up very sharply. Because investors, the underlying theme is that investors have to look at bonds that are well priced, offers protections against rising interest rates or against credit risk, and gives you that level of returns that is can beat inflation as well. An SBI perpetual bond filled in the all the categories very well. Then coming back to the markets, what's available for investors? Investors you can the private placement we saw Bajaj Finance issue 2-year bonds at 7.2%. You have Tata Motors Solutions coming with 10-year perpetual bond at 9.23%. And you have other issuers like JM and others issuing 10-year bonds. These are the main issuers in the market. LIC Housing Finance is out in the market to issue 3 and 5-year bonds at 7.5 and 7.79% respectively. We have companies like Tata Clean Tech and Piramal Enterprises issuing 2-year MLDs that are finding a lot of favor with ultra high net worth individuals. Thank you for listening in to Let's Talk Bonds podcast. Let's Talk Bonds is the weekly podcast where I'm taking you through all the best investment options available for investors in fixed income markets. Thank you very much.